Ethos webinar on the EU Taxonomy. Some of the content in this webinar we have talked about before, obviously, as the regulation has been in place for a while. Today we'll dig a bit deeper into the reporting requirements, and I'll be joined as well by Axel, who is sitting next to me right now, and Ida, who will be joining in about 20 minutes, 30 minutes to talk a little bit about the practical process for aligning EU taxonomy activities. Let's see here. Please let us know as well if you aren't able to hear or any technical difficulties. We'll be taking questions throughout the webinar. So just write in the chat or we'll have also about 15 minutes at the end where you can ask questions, and then we'll try to get to them there as well. So like we said, we'll dig a bit deeper in today to reporting and disclosure of information. So what information needs to be disclosed and in which format. But in the beginning, we will start with an introduction. So some of you may have heard this before, but a good freshener is always good to have so that you know exactly what the EU taxonomy is and what it includes right now. There's been some confusion about whether objectives 3 to 6 should be reported on. Also, in next year's report for this year's financial and sustainability information, that is not the case as it stands now. So only objectives 1 and 2 should be reported in next year's report for listed entities that have over 500 employees. So what is the EU taxonomy, and basically why has it been developed? So you have the Sustainable Finance Disclosure Regulation and the Taxonomy Regulation, as well as the Green Bond Standard and the updated MiFID and AIFM and UCITS IDD regulations. All of these take sustainability into account in some way. So you have the Sustainable Finance Disclosure Regulation, which is a classification system for financial products, or rather not a classification system, but a transparency regulation. So if you're talking about ESG or sustainability in some way, then you must report information in a certain way according to the SFDR for financial products. For products that are promoting environmental and climate objectives, the taxonomy regulation also kicks in within the SFDR. So climate and environmental activities can report percentage of substantial contribution to climate and environmental objectives that are listed and classified in the taxonomy regulation, which is a classification system. The Green Bond Standard simply takes the taxonomy regulation and applies it to green bonds. So if you want to issue a bond according to the taxonomy, you can do so. So everything that we talk about today, you will be able to also issue in a green bond framework. So basically a use of proceeds bond that would be used to fulfill one of the taxonomy objectives. We also have these updated financial regulations that have to do with integration of risk. Obviously here, the relation to the taxonomy regulation is that the areas that the taxonomy includes, pollution, water, climate change adaptation, mitigation, biodiversity, etc. All of these areas are areas that you will have to report on as a listed entity within the CSRD, and also how you manage that risk. So how a financial entity or product will basically assess a listed entity and how they manage risk will also be based on how they manage these areas within the EU taxonomy. I'm not sure if we can get this camera to move. It's always annoying to see yourself while you're presenting, but let's go ahead. So why has this been proposed then politically? basically, there's a political push, obviously, for management of climate change and environmental issues. That is why the EU Green Deal was proposed. That includes the goal that EU reaches climate neutrality by 2050, among other things. So basically what the EU taxonomy has done is that it has taken that goal and made it concrete. So if the EU is to reach this goal of climate neutrality by 2050, then which levels of emissions and environmental impact should each industry basically be at? So if EU is to reach climate neutrality by 2050, what level of emissions can we tolerate from, for example, the cement industry? What level of impact on biodiversity can we tolerate from clothing and retail? So it's a classification system that is bringing us to the goal of climate neutrality by 2050. And it is incentivizing companies to align their economic activities with the EU taxonomy so that they are on track to be a part of contributing to climate neutrality by 2050. So it's also a tool for investors then. A lot of investors want to invest in this transition and want to contribute to climate neutrality by 2050. So if they see that a financial product has a high percentage of alignment with the EU taxonomy, they can then invest in that product and be sure that they are contributing to this goal of climate neutrality by 2050. So the sectors that are currently included for objectives 1 and 2, which are climate change mitigation and adaptation, they are listed here. As you can see, many of them are quite emissions intensive. So the EU taxonomy really focuses on the sectors and industries that are the most emissions intensive. A lot of people have thought that if you are an activity that is included in the EU taxonomy, you are for some reason more green or sustainable, but it's actually quite the opposite. If you are included in the EU taxonomy, you are prioritized for transition and decrease of emissions and environmental impact. These are the industries that will have to transition and allocate capital and capex to transitioning in order to contribute then to this goal, overall goal of climate neutrality by 2050. For the later objectives then, that have to do with pollution, biodiversity, water, etc. Now, there's some sectors added, so agriculture, forestry and fishing, civil engineering, disaster risk management, restoration and remediation. So these activities will have to then report in the next reporting cycle or whenever these objectives are published. They have not been published yet. All right, Axel.
So the EU taxonomy is based on 6 environmental objectives, where the 2 first ones has been published and well, have all the details set up now. We're currently waiting for the 4 other ones. They were supposed to be published this year, but so far they just simply published a draft of this information. However, we're still waiting on, and I think they're gonna propose something in like before next year. So the basis of the taxonomy is basically 3 different pillars of activities that you need to comply with. First of all, it's substantial contribution, and this means substantial contribution to the environmental objectives set up in the EU taxonomy. These objectives, the technology screening criteria, these are different based on economic activity and different based on sector as well. First, if you comply with this one, you need to comply with the do no significant harm as well. This means that you can't have any other impact on the 5 other environmental objectives, as I showed in the previous slide. What's new is also how you need to tackle the minimum safeguards. you need to fulfill the minimum safeguards requirements. Previously was set up to only be on activity level based on what you focus on. Nowadays, it's focused on the minimum safeguards as an entity. So, as I was saying before, the company needs to fulfill with have a substantial contribution to the environmental objective they set up. This means that previously you set up what economic activities that needs to be that are eligible, meaning within what sectors are your company what sectors are your company focused on. The next step is to look through the screening criteria and to determine if you can align your company activities with the EU Taxonomy. And to the right, we have an example of what the EU Taxonomy can look like, what you need to comply with as well.
Yeah, so just to provide some color here, as you can see, the examples listed on the right are quite technical, and every single activity, whether it be transport, manufacture of other low carbon technologies, cement, production of steel, whatever it may be, has their own technical criteria. So this is just the specific ones for manufacture of other low carbon technologies, which is a bit of a catch-all category for activities that don't go into other categories in the EU Taxonomy. If we want to break these activities down, as we said, we have cement, we have steel, we have production of solar and wind. They are basically partitioned on one that is then enabling activity, the other that is own performance. So you can be an activity that is improving the performance of another economic activity. For example, then providing batteries to electrical vehicles, or you could be an activity that is aligned based on your own performance. So basically the electric vehicle. Activities that are contributing to this transition, but not in themselves are contributing to lower emissions, they are also included in the EU Taxonomy. You can also align then investments or capex allocations with the EU Taxonomy. So if you have an activity that is not aligned today with the technical criteria, for example, a cement, then it's a good example, a cement producer that doesn't have low enough emissions or doesn't fulfill the do no significant harm criteria in relation to water and pollution. If they show that they will fulfill these criteria within 5 years with investments or capex allocations that they make, those capex allocations are taxonomy aligned. So to market and to investors, you are not only reporting how aligned you are today, but you are also reporting how aligned you are going forward. What investments are you making to be a part of this journey to climate neutrality by 2050? So for DNSH then, we also have technical screening criteria. As you can see, they're also very specific. These are more general, so some of these go, you can find them in different industries and sectors again and again and again. For example, you see the need to perform a climate risk and vulnerability assessment according to climate change adaptation in many different taxonomy-aligned activities. There could be then a DNSH criteria of direct greenhouse gas emissions, so that you have to be below a certain threshold, and then also risk and impact assessment of water and transition to a circular economy. So how are you managing waste for that economic activity? So even then, for example, if you're producing electrical vehicles, which is great, you're reducing emissions, but you also have to make sure that you have control of all these other factors. So what are you actually doing with the car once it has expanded its lifespan. When we look at minimum safeguards, which is the last hoop that you have to jump through in order to taxonomy align an economic activity, you have to have proper governance of the areas of human rights, corruption, taxation, and fair competition. So corruption, taxation, and fair competition are areas that are written into EU law in different forms and have been so for many years. Human rights is the big new area here that companies have to pay attention to. A lot of companies do not know there are significant human rights risks in their value chain. And this is a requirement if you would like to taxonomy align any of your economic activities. So even if you are able to show that you are fulfilling the technical criteria when it comes to substantial contribution, you have performed a climate risk vulnerability assessment, you know how you're handling your waste. If you're not fulfilling minimum due diligence requirements in relation to human rights, you won't be able to report any of your economic activities as taxonomy aligned. This basically means that you as a company on entity level have to perform a human rights impact assessment. And this is explicitly stated also in the latest report from the TEG, the Technical Expert Group, on how to apply minimum safeguards. And that is applied through the fact that a company has performed a human rights impact assessment, so they know their risks related to human rights in their value chain, and they have also acted to respond on those rights and mitigate them through a human rights due diligence. So if you haven't done this, you will not be able to align any of your economic activities as taxonomy aligned. So here you see then the requirements broken down. As you can see, corruption, taxation, and fair competition, quite straightforward, and many companies fulfill these requirements. But for human rights, even though most companies are free from violation or court cases on human rights and labor rights or consumer rights, and they may not have a case in the OECD National Contact Point database or the Business and Human Rights Resource Center, most companies have not performed a human rights due diligence, and within that then a human rights impact assessment. If you have not fulfilled that one little criteria, or it's not so little in effort, but it's little in text, to the bottom right-hand corner, you will not be able to align, report any of your revenues, CapEx, or OpEx as taxonomy aligned. If you do have a violation in the areas of human rights, fair competition, or taxation or corruption, as in you do have a court case, a past court case, that does not mean that you are disqualified forever. What you have to do then is basically show that you have taken action to lower the likelihood that such a violation occurs again. If you can show that you have done that, then you are again relevant for taxonomy alignment. So the fact that something happens or past violations or controversies is not what is being assessed here. What is being assessed here is process and the fact that you are continuously working with your risks within these areas. Axel, do you want to take the summary here?
Yeah, as Jonathan just said, this is basically just a picture to see what you need to do in order to have any kind of green sustainable activity. First, all these need to be confirmed until you can actually align your activity, and this means also like funding it with the green bond, etc.
Exactly. So who needs to do this then? Actors that must report on the EU taxonomy alignment in their sustainability report. These are then listed entities on a regulated market with over 500 employees. Financial market participant offering financial products in Europe. They will have to disclose percentage of taxonomy alignment. It's not a requirement to have taxonomy aligned investment products. However, it is included in the questions that a financial advisor will have to ask investors according to MiFID and IDD. So when a financial advisor sits with a customer, a retail investor, a professional investor, ask them what type of sustainability preferences do you have? They will also have to ask, do you want your financial product to be aligned with the EU taxonomy in any way, to a degree of 20%, 80%, 100%, 2%? If the customer or investor then answers that they do want to have a taxonomy aligned investment product, the financial advisor must say either we do not have those products, or here are the products that we can offer that do have some sort of taxonomy alignment. Yes, so not only listed companies, it's good to note, have to report taxonomy alignment, or companies that have bonds out on the market, on a regulated market, but also banks and insurance companies, because they count as then public interest entities, but still only if they have over 500 employees. The EU taxonomy is being implemented stepwise. So the first reporting on alignment will take place then for this year in next year's report. So in next year's report, companies that are listed and have over 500 employees will have to report percentage of taxonomy alignment for turnover, capex, and opex that you see there on the right, for their whole revenues, capex, and opex. So basically the percentage of your taxonomy aligned revenues, capex, and opex over your total revenues, capex, and opex. This will then be reported in the next year's report for this year's reporting cycle. We are expecting then also objectives 3 to 6 to be released soon. EDA will go into that later, but what the EU has indicated is that they will not require reporting against those objectives maximum one or minimum 1 year after the objectives are released. So we would advise that a company that is within the EU taxonomy focus on objectives 1 to 2 for now. If you do not have a very strategic objective within objectives 3 to 6, for example, if you are a rental company, you might want to look at the draft for circular economy, as the drafts are often quite similar to the final product or result. So looking at it now and assessing yourself against the draft now is not lost work, but if you do have a tight schedule, focus on objectives 1 to 2 for now until the other objectives are finalized. The financial sector is reporting 1 year after everyone has reported, all the non-financial actors have reported their taxonomy alignment. So the financial sector doesn't report until full year 2024 for the year 2023 regarding how much of their financial products are taxonomy aligned. And this is so that they can take the information provided by the listed entities and incorporate it in their fund calculations. And here you can see just an example of how the whole regulation works in summary. So percent of revenue, percent of capex, and percent of opex that is taxonomy aligned and can be counted as a green sustainable activity according to the EU classification system of a green sustainable activity. So again, that you are not in the taxonomy or that your industry is not included does not mean that you are not a green sustainable activity. However, this is one classification framework for defining a green sustainable activity, and one that will become important because it is also part of the MiFID and IDD regulations in moments of advice with customers, but it is also just a framework. So don't focus all your efforts on this framework, but it will become an important one, and especially for the industries and sectors that are included today. And here is then an example of how a fund then would be calculated. So you see there that you have 3 securities at the top, so listed entities. They are then calculating and reporting their percentage of taxonomy alignment. You take this times the weight that security or equity represents in the portfolio, and then you get the portfolio's total taxonomy alignment, which will then be reported to investors, retail investors, professional investors, etc. Do you want to touch on this, Axel, a little bit? And then we'll throw it over to Ida.
Yeah, well, yes. This is simply just how you calculate the percentage of the environmental objectives or environmental activities in the portfolio. This varies depending on what types of asset it is. So yeah, it's still, you always measure the market value of an asset and then divided by, or the total assets divided by how many of these are taxonomy aligned as well.
All right, Ida.
Yes. So with all this information being presented to you, we also want to give you some guidance on how to actually do this in practice. And of course, everything should always be adapted to your specific needs. But in general terms speaking, the first thing that you have to do is to understand if your operation in any way is related or covered by the EU taxonomy by doing an initial screening of sectoral inclusion. And when you identify that, or if you identify that you have activities that would be that are relevant for you and covered by the taxonomy, you have to assess if they are eligible. And it could be eligible then to any of the objectives, but as mentioned for the upcoming report, it's mitigation and adaptation that's relevant. And by assessing if it's eligible, you have to go into the delegated act for the specific objective. And I need a new slide. And I brought one example here. So when we are going into the delegated act for climate change mitigation, we have one activity here, 6.5, transport by motorbikes, passenger cars, and light commercial vehicles. And the first thing that's always presented is the description of the activity. And it's the description that will be what you will have to assess if your activity fits into this description. So in this case, it's about purchasing, financing, renting, leasing, and operation of vehicles under certain categories, which is basically motorbikes, passenger cars, and some larger cars like minivans. The activity also gives you some guidance in terms of NACE codes, but this should never be, this should never exclude your activities because it's just to be seen as a guidance. And in this case, this activity is also a transitional activity, as mentioned before in the presentation. Going back to the process slide, when you know that you have one or several activities that are eligible to any of the objectives, you have to evaluate if you substantially contribute to that specific objective. So going back to the delegated acts, so after one more. So after the description of the activity, the taxonomy presents the criteria or the technical screening criteria for substantial contribution. And in this case, you have to ensure that the vehicles of relevance are fulfilling the thresholds for CO2 emissions. And going back to the process again, when you have evaluated the substantial contribution, you also have to ensure that you're not doing any harm on the other objectives. And in this case, we're talking about transport under climate change mitigation. So you have to go back into the, back into the delegated acts. And one more. After the substantial contribution criteria, they also list the criteria for do no significant harm. And this is always in relation to all of the other 5 objectives. In this case, I only have the first 3 ones. So in order to understand if you are not making any harm to climate change adaptation, you have to comply with Appendix A in the Delegated Act. And in this case, it's it's about conducting a climate risk and vulnerability assessment. For this activity, sustainable use and protection of water and marine resources is not applicable. But on the other hand, transition to a circular economy is. And then you have to assess if the vehicles are reusable or recyclable to a certain extent. So going back to the process picture again, when you have done these steps, like for 1 to 6, you will either understand that, okay, we are compliant for this activity or not compliant. And as mentioned before in the presentation, there are options to either seek financing or to align your CAPEX and OPEX that you're using to ensure compliance in the future. And no, stay here. And then you also have to assess compliance with the minimum safeguard, as Jonathan were telling you about. And worth repeating is that for step 1 to 7, we are looking at activity level, and now we're moving to company level. You have to ensure that the whole company is complying with the minimum safeguards regarding fair competition, tax, anti-corruption, and human rights. And hopefully you will end up with the conclusion that you are taxonomy alignment, and then you are going to do your calculation of the share of aligned revenue, CAPEX and OPEX. Yes.
And as Jonathan was describing previously, the aim of the EU taxonomy is to provide more transparent environment that allocates capital to sustainable activities. And as part of this, we have the green bond standard that aligns, connects with the EU taxonomy as well. So in order to issue a green bond, you need to align this activity that you're going to finance, and then you need to go through the whole process. As Ida was saying, this means that you need to comply with the minimum safeguards as well in order to issue a green bond. When you have minimum safeguards in place, you can then align or look into what activity that's actually aligned with the EU taxonomy.
We have a question here. Hi, does the company need to fulfill all of the DNSH criteria, or can you be partly aligned and maybe fulfill the rest within 5 years, like the substantial contribution? So yes, you can be partly aligned. The important factor here is that you aren't allowed to double count. So if you're aligning a percentage of your revenues today with the EU taxonomy, and you are also investing in the same activity to basically align with the DNSH criteria, you have to make sure that the revenues and CAPEX allocations are separated. So if you're counting a percentage of revenues as aligned, you cannot also count the CAPEX for that activity as aligned. So that is the important part here. But if you are, for example, aligned with the substantial contribution criteria for an economic activity, you are fulfilling minimum safeguards, you've conducted a human rights impact assessment, but you are not fulfilling the DNSH criteria or some of them, then you will not be able to report that activity as completely aligned according to revenues today. But the CAPEX allocations that you make to that activity now can be aligned as a part of your total capital expenditures. So that would be the answer to that question, but good question.
And going back to this is the part of the green bond as well. where you could use it to fulfill these do no significant harm criteria. So you can use the capital from a green bond in order to perhaps increase your technical specification or improve your products in order to align with the technical specifications. So in order to issue a green bond, you first need to look into what type of activity is it that we're going to finance. You need to provide a transparency of your framework, meaning publish a green bond a standard framework, and you also need to have it confirmed by the ESMA or other reviewers.
And worth noting here is that there is discussion about making this a requirement for all green bonds, that they have to be taxonomy aligned. So there is that debate going on. This is obviously facing a lot of criticism, as even though the taxonomy covers a lot of industries and sectors and environmental objectives, it still doesn't cover everything. So if this would be the only way to issue a green bond, it may be a bit narrow. But this discussion is being had. So this means that the green bond standard will become an important green bond framework. There is no doubt about that.
And the second way how the EU taxonomy connects with other regulations is the SFDR requirement, as Jonathan mentioned in the beginning. Here you have in order to call it a sustainable investment in Article 8 and 9 fund, you need to, one option is to align your investments with it, or you only invest in activities that are taxonomy aligned.
Yeah, we have some questions. So in which format do you report non-eligibility and non-alignment? Ida, do you maybe want to tackle this one?
So you're going to report on the taxonomy in relation to the template that's provided in one of the annexes. How can I explain this? Basically, so it's kind of a big table where you are going to present your alignment, but also your non-aligned share of both turnover, capex, and opex. So I think when you're seeing the template, which we didn't include today, unfortunately, you will understand how you're presenting each share.
But yeah, it's all shares and percentages in the taxonomy. So
exactly.
You report then the share of non-eligible economic activities and the share of non-aligned economic activities with in the ones that are eligible. So everything is basically a big division exercise. You mentioned the need for human rights risk assessments in order to report any alignment. Are there any requirements on how that risk assessment shall be conducted? To document, how do we know that we've done it right? Great question, really good question. There is a way to do this, or a process, and it is stipulated in the OECD guidelines for multinational enterprises, as well as the UN guiding principles. This process has been used for years by industries and sectors that are particularly exposed to human rights risks. So those are the frameworks to be used. In the minimum safeguards report that was released or finalized just a few weeks ago, they explicitly make the connection between minimum safeguards compliance in relation to human rights risk assessments and OECD guidelines and UN guiding principles. So if you follow that process, you will become compliant. So it's not a rocket science or a mystery. There is a process and steps to be taken, and these are the same for all, regardless of what type of sector, industry, or company you are. You will just have different human rights risks and different proportionality and scale to your human rights risks in your value chain. But the steps are the same for everybody. We had a seminar on the minimum safeguards a few weeks ago. If you email us, I'm sure we can send out the slides for that as well. All right.
Yes, so the EU taxonomy is living regulation, I would say. And by that, I mean that the regulation aims to include or extend included activities and sectors over time, and also aims to, of course, deliver the objectives or technical screening criteria for the remaining objectives. And the platform on sustainable finance, which have been assisting in drafting all regulations, have published a report with recommendations on data and usability for the EU taxonomy, and also in relation to other EU regulations. And it's quite a long report, but we took out some highlights that could be of relevance for you. And as mentioned before during the presentation, the platform suggests that the Commission shall continue to have 12 months of implementation when they are setting any new technical screening criteria, which is of extra relevance when they are or will be publishing the remaining objectives. It has been quite unclear, like how long will it be before we have to report when they are finally released, and the platform is therefore asking for clarification that it will be continue to be 12 months of implementation before you have to report on the data. And the platform also requests further guidance on the implementation of the taxonomy. And there has been a few FAQs out there, but they want to have, sorry, they want to have more guidance in terms of FAQs, and also to eliminate the use of imprecise criteria. And by that, they are meaning that sometimes the taxonomy are referring to criteria such as substantially reduce or best available solution, which has to be defined in order to implement the taxonomy equally for everyone. And one more point that's been raised in this report is that the platform wants the EU taxonomy to be more aligned with the other EU regulations. And two examples are the SFDR and the CSRD. And here they are talking about the methodologies used, the terminology used, and the criteria, and also the references to respective regulation. And to give an example, in the SFDR, they are also talking about do no significant harm. And as it is today, these are not aligned with each other. And yeah, it's not like clear in the reference that this could mean the same thing, and the platform seeks the regulation to like find the how to say
the interconnected.
Yeah, exactly, and to make this regulation as efficient as possible.
So we have a question here based on the 12 months implementation.
Yes.
The reporting template that we talked about earlier that we don't have in the presentation now, but we can send it out. The reporting template has columns for the other 4 parts that are not yet published. So the other 4 objectives, should these columns still be in there? Or?
Actually, those columns are voluntary for non-financial undertakings. So of course you don't have to report on those that's not published yet, and you don't even have to be that detailed in the template if you don't want to.
Yeah, and as we said, the platform has made it, has stated again that they are seeking implementation 12 months after they finalize the 4 last objectives. So you will have some time after they are published. All right, I think that's it. We'll hang around a bit if there are any further questions.
can tell you that we have another webinar upcoming on its introduction to sustainable finance, the 25th of November, if that would be of interest to any one of you.
Juliana asks, any examples of how to align reporting for FMCG companies? Examples I could see. So obviously, as this is the first reporting cycle for everyone, this is the first time that actual taxonomy alignment must be reported for listed entities that have over 500 employees. There aren't that many examples. However, what everyone will report is the percentage of revenues, CapEx and OpEx, of total revenues, CapEx and OpEx that are aligned with EU Taxonomy Objective 1 and 2, climate change mitigation and adaptation, as well as how you got those numbers. What was the process to get there? What steps did you take? So what Ida was talking a little bit about earlier. So I wouldn't be too worried about looking at references or examples. Simply follow the steps, get the numbers, publish them, and then be transparent about how you got those numbers. Okay, I think we'll stop there. No further questions. If you have any further questions that pop up after the seminar, just email us. We'll have another seminar, as Ida said, on the 25th. This will be an introduction to sustainable finance led by Emil, who works here at Ethos as well. To repeat then, Ethos is a management consultancy specialized solely in human rights, labor rights, environment and climate, and anti-corruption, as well as the governance of all of these areas. We've been around since 2007. We will send out these slides again after the presentation. So just send us an email and you'll get access to them. Also, there was a question about human rights impact assessment. How do you do that? We did have a seminar on that a few weeks ago. So if you're interested in seeing those pictures, we can send them to you as well. Otherwise, I wish you all a nice rest of your day, and we will see you soon again.